we were having a pretty sluggish export sales pace despite it being our harvest time. We started bottoming in week 6, and look at what happened. Just a huge spike up in sales for that 1 week. That's how sensitive it is. It's not, you know, a month or a year. It's 1 week, and they come in and make a big splash with these purchases. Then what started to happen? The market, that was below $6 that time. We started to firm back up, go up towards $6.50, $6.60. We started to see the worst sales figures of the year again. What happened then? The prices dipped back below. We started putting the low in about $5.75, below $6. Export sales start getting hot again. And then what's happened the last couple of weeks? We've taken prices back up, and the sales stink. I could probably tell you, I didn't drive all this way to tell you that it's going to be in a 50-cent range, but this chart shows you that 50-cent range is pretty much locked in right now. We've seen good sales at low levels and terrible sales at high values. And I don't know if high is what people want to think of with 660, but that's what we're kind of starting to see, is that a range really built in. Now I bet that if Argentina's crop situation gets worse, this range will be boosted up just a little bit. For the time being, there's very little way to argue the idea that we see a lot of end user buying and pricing down below $6. So you've got a pretty good floor on there, despite what the wheat to corn ratio is. If corn gets below $6, we've seen export sales start to pick up. And again, you get up above 660, and things start to change around a little bit. So I really think that that chart shows truly what price has on demand. One thing I'm talking about is the Argentine drought situation. What I'm trying to do here is take the same area and put it one side to another. The left side of this is the percent of normal precip this winter. And the right side is the key production grounds. And I know it's not the same looking map, but this is basically right there. It couldn't be in a worse location. It's absolutely right in the heart of the key growing areas of Argentina. And that crop started out, we'll see where it started out in the next slide and where it is today. But it has been an incredibly major drought, deep drought that people are probably still projecting. We talked about the USDA making a 3 million ton cut in their production estimates in January. We could see another 5 to 8 million tons lost in the next couple of months. So this is your story. We got the January crop out of the way, January crop report out of the way. There is minimal fresh fundamental news from now until the March 31 stocks makers report. There just isn't anything exciting in the market right now, except this. This is really the story. You know, if you've seen the markets the last 3 days, they are only trading what the forecasts for this weekend are in Argentina. I mean, it's that critical that if they get some rains this weekend, we feel like the estimates that the market is currently trading are probably going to be accurate, and therefore you could probably take some weather premium out of the market. However, if they miss these rains, you know, this drought's going to be set in deeper. We could start to see another 1 to 2 to 3 million ton additional losses out of Argentina. So this is a very key time in this case. And again, what I showed in the last chart is that our export sales numbers are probably going to start to firm up if we see deeper cuts in the Argentine corn production areas. This chart is simply amazing. This is Argentina's corn production levels. The black bar on the top is where we started this year. Now look at that. Look at how much bigger it was projected to be this year than any time in history. That's all acres. That is all acres. You can see they were projected to be 30 million tons, almost 6 to 7 million tons better than they were at any other year. We currently have the second, the middle black bar is actually where the USDA currently is at 26 million tons. And then the bar that I put in there is actually where the market believes the Argentine corn production will be, at about 21 to 22 million tons. So again, if we see that go back below 20 million tons, is when I start to think that 6 to 650 range goes to 625 to 675, and maybe an outside chance, and this is outside of that 650 to $7 range, is where we start to see a lot of the price action take place. I bet it's still going to be that 625 to 675 area would be your next level of where you'll see values kind of oscillate. I kind of question even putting this chart in here. This used to be the staple of any presentation I put together, but it's basically along the horizontal axis is stocks-to-use ratios for each year, and along the vertical axis it's the price level. In this case, I'm taking a snapshot in time every year's January stocks-to-use ratios and everybody's January price level. And what I wanted to point out is that you can see, as you get into tighter stocks-to-use ratios, there's far more variability because there's a lot of other things happening in the world in each one of those years. Last year, again, we were called upon, we did not have this feed wheat situation that we have today. So the prices commandeered a bigger price level. We were talking about $7.25 a year ago, and this year we're about $1.25 off now. And right now that makes sense. We could still be a little bit firmer, but it just still makes sense. I just want to show relation-wise, we now know a price level. We have a known price that starts to cut demand. Last year we were kind of treading into new waters, and we didn't know what price level was needed to really cut that demand back. And we found out soon after this January numbers came out. All right, I'm going to shift into beans. There's not a real story here, and so I don't put nearly the emphasis that I do in corn on the bean market. But I wanted to make a couple of points on the balance sheet. Again, we got this 275 million bushels carry out up again from last month's 230. But what I wanted to show is look at the two bluish data sets. That's 2010, that's last year, and that's this year. What I want you to take away is that, and I want you to remember this because in a couple slides I'm going to reference this again, we lost 2 bushel an acre in yield from 43.5 down to 41.5. We lost 2.5 million acres out of production from 2010 to 2011. Despite losing 2.5 million acres and 2 bushel an acre, our carryout grew 60 million bushels. Now, that doesn't tell you the story of the bean market. I don't know what does. And I'm going to make even a bigger point about that situation in a couple more slides here. And you really see why I say there's no story in the bean complex. This is one of the reasons why there's no story in the bean complex. This is domestic bean demand. We've seen it trend lower since 2006. That was our high water mark in domestic bean demand. About 2006 was when we started to see the major ramp up in ethanol production. Well, guess what? We knew we needed to start committing resources to corn. The processors knew that was going to be the case, and so guess what? We couldn't afford it. Our domestic bean demand is going to start to shrink. Obviously, DDGs also have an impact of offsetting meal usage. So you can see the writing on the wall. You start to see a slower crush pace. We just had an announcement out last week that Cargill Des Moines is actually idling its, actually permanently idling its bean plant. I mean, it's just another low margin type of environment that's actually starting to impact domestic bean demand. So that's a reason why, again, we saw the corn demand was shooting higher, bean demand was topping out. We also see in export sales currently projected at 68% of the annual total. That's okay, it's not great. We did see a cut from the USDA in projected export sales in this last report as well. So you can see there's just, it's not anything that's catching anybody's attention too much on the bean demand situation. However, I showed Argentina, I better show Brazil. This is again, it's harder to see here, but this is about Brazil going that way. And this is southern Brazil, and you can see that's where the heart of the deep set drought is right now. And about 40% of the bean production in Brazil is grown in those southern 2 provinces, or southern 3 provinces. So, it's significant. But with the high level of world bean stocks, the market still isn't that excited about this situation at this point. But you can see it is, the northern provinces are not in any jeopardy. You've got the Mato Grosso and the Goiás, Minas Gerais. Those areas are in good shape, but the southern provinces, Paraná and Rio Grande do Sul, those are the ones to keep watching in the next couple of weeks. But most people don't feel that there's a real story yet in the bean complex, just because of the adequate world